Dan Frio here, the Mortgage Update, and today I want to talk about a program that we just rolled out. It's the Home Ready program. And a lot of our consumers or a lot of our clients are going after or through this program instead of FHA. And I'll explain in more detail at the end of this, but I want to go through the guidelines with you. So if this is a realtor watching this video, you'll know the guidelines that we have. If you're a home buyer, you might get, these are the facts behind the guidelines. So please watch, make sure if you're dealing with a realtor, they're informed. If mom and dad, aunts, uncles, coworkers are giving you some advice, please, that's why I publish these videos, to give you the facts. Guidelines change all the time, so what might have been available or the guidelines even a month ago might have changed. So I try to keep the videos fresh and updated with brand new guidelines and updated guidelines. So I'm going to go through this, and you might find out yourself why you would agree that this program is better than an FHA loan in your instance. So first of all, let's go through the guidelines. It is a 97% loan, so it's a 3% down program. It is available from 1 to 4 units. I'm going to go through the 1 units. Basically, that's a single family home. I'm going to go through that, and then if you want more details, you can either reach out to me, click below, or subscribe below, and I'll have more videos on 2 to 4 units. But you can email me or call me or get in touch with me any way you can. It is occupant properties, meaning it will be your primary home. So it can be condos, PUDs, townhouses, single families, anything of that sort. There is in right here, this is huge. There's no income limits in a lot of the areas in Chicagoland, and I'm going to try to post a link below that'll launch you to the site where you can plug in the zip code where you're looking or where you live, or where your clients are, to see if there is an income limit for that area. If there is an income limit for that area, it'll tell you what the maximum income you can have to qualify for this program. Kind of another good area here is you need 3% down, but here's the money that you personally need into this. Basically, you can get the money from gifts, grants, and other sources. There's not a lot of grants out there in community seconds and things like that in the Chicagoland area, but you can get gift money to cover that 3%. You can do this with pretty much every product out there, 10-year, 15, 20-year, and going forward. So some more guidelines is, we'll skip right there right now. Again, your 97% DU means it's a desktop underwriter. That means we have to run your loan through Fannie Mae. You can't do this as the consumer, and you can't do this as the realtor. We have to do this for you. We take all your data down, we upload it into Fannie Mae's desktop underwriter, and it'll issue us an approval, and then we'll get that approval or pre-approval back to you. Non-occupant borrowers are allowed in this program. That's another cool feature. We won't go through the 3-2-1 program. Another bonus for this right now is currently the PMI factor on this is, in most cases that I've run so far, the MI factor is 0.55. So that doesn't mean anything to you yet, but it will in a minute. So I'll go through some of that information right at the end. You can see here income limits. I'm sorry, I have an Excel spreadsheet that gives me all this data, but you'll see that a lot of areas in Cook County, there are no income limits. So if you make $100,000, $90,000, and you were turned down for a grant program or some other program, this might be the program for you. Again, that's why a lot of our clients were moving to FHA. We're getting them out of the grant programs and things like that if they have a little bit of money, or they can get money from mom, dads, aunts, uncles, and such to help them with the down payment. So I'm going to go through just a couple numbers with you on why we're choosing this program versus FHA. One is the FHA. When you do an FHA loan, FHA charges you. It's not me, it's not your lender charging you, but they charge you what's called an upfront mortgage insurance premium. So if you're buying a $200,000 home, I did the numbers. Your upfront mortgage insurance on the FHA program would be $3,377. On the Home Ready program, it's $0. On that particular program with FHA, you have what's called a monthly PMI, and so does the Home Ready program. But watch this. The monthly PMI on FHA is $136.71, and that is for the entire length of your loan, so 30 years. That comes out to be $49,215. So if you add that plus your upfront mortgage insurance, you're paying over $52,000 in mortgage insurance. On the Home Ready program that we're having right now, again with the discounted PMI, you have no upfront mortgage insurance, and your mortgage insurance would come to $88.92. And it's going to run for approximately 10 years. So that's going to cost you just a little over $10,000. So again, the other program was approximately $52,000 FHA. The Home Ready is $10,000. So you're talking about a $42,000 difference in mortgage insurance. So that alone is the reason why we're converting a lot of our FHA clients into this Home Ready program. I don't know how long it's going to be around, but if this sounds like you, let me go through the criteria with you. A 620 credit score, no bankruptcy in the last 4 years, no foreclosures in the last 7 years, and you probably won't know this, but if you do, you can get or have your debt ratio go up to 50%. So I'm going to give you my information here. Please, if I can be of any help to you or your clients, please reach out to me. My website right here, themortgageupdate.net. You can reach me at 630-338-1160, or you can email me at dan.frio@gmail.com. Please don't forget to subscribe below. Ask any questions that you want through YouTube and or emails. I'd love to help. Take care. God bless. Have a great day.